there were children born during the Great Depression that were becoming adults in their 50s. And they saw how their parents lost everything because of the stock market. So from 1950 to 1960, for instance, using the Fed flow of funds data, net household allocation to equities was negative. People weren't putting new money into stocks. They were taking it out and putting it into bonds.
In this electrifying interview with Raoul Pal, Fundstrat's CIO and founding partner Tom Lee unveils a jaw-dropping bullish outlook on the stock market and Bitcoin. His insights will change how you see the future of investing. Tom takes us on a fascinating journey through history, linking today's market trends to the aftermath of the Great Depression. He explains how the fear of another crash kept investors hooked on bonds through the 50s and 60s, a mindset eerily similar to today, even as negative yields signaled trouble. And guess what? Bitcoin and stocks are positioned to benefit massively from this shift. But that's just the beginning. AI is about to reshape everything, and Tom breaks down exactly how it will fuel a market explosion like never before. Stick around till the end, where he reveals the wireless fiber boom study, a game-changing analysis of two massive money-making opportunities in AI, stocks, and Bitcoin. Before we dive in, do me a quick favor. Like this video, drop a comment, and share it with someone who needs to hear this. And if you haven't already, subscribe for more mind-blowing Bitcoin and stock market updates. Now, let's get into it.
And bonds were actually having rolling negative performance because yields went from roughly, I don't remember, like 3% starting level to almost 7% by the end of the 60s. So they were losing money in their bond portfolio.
And there was yield curve control. So this was financial repression. So they're actually losing money in real terms as well.
That's right. And so, of course, guys like Warren Buffett did famously well, but it shows you like there's a generational scar. And I think that post.com, Gen X was generationally scarred, which is why hedge funds did very well in the 2000s, but retail investors didn't buy stocks. And then, like you're saying, 2020 is when the first millennials were in their 30s. 1980, yeah. So they'd be like in their 30s by that point, and they're the ones that suddenly discovered equities.
And they discovered crypto as well, which was
yes
at the same time. So give me your crypto story as well. Where did that come in?
Bitcoin actually had come up in several discussions when I was at JP Morgan, and John Normand, who was the head of FX at the time, had talked about it. He wrote several pieces about. He wrote one that we had a whole conversation around, our firm did, which is that he thought that Bitcoin could become a currency at some point. Now, I think the network value of Bitcoin was like 20 billion, okay? Which made it like a decent sized stock. But he was saying that it was obviously mostly for dark web and, illicit purposes. So I didn't think much of it, and I didn't even follow Bitcoin. But then we started Fundstrat. And then in 2017, I remember just for some reason, I think I saw the price of Bitcoin again, and I was like, whoa, this thing just went 10x in just a few years. And so I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. Like most people, I think, tend to think if something's gone up a lot, it's a bubble. But actually, in the equity world, a lot of times it's actually telling you something's real.
Particularly when it's a network. That's the big difference.
Yes.
Networks tend to do this much more consistently.
Correct. So with our not great understanding, we did spend about 4 months doing a research white paper on Bitcoin. It's exactly what you said. First, we found that if you just did a very simple two-factor model, which is the number of wallets and then activity per wallet, it explained over 90% of the rise of Bitcoin since inception.
Yeah, and it's a good approximation for Metcalfe's law. It's the best way I got of fitting Metcalfe's law to the network value.
That's right. And then, we realized that's exactly why social media networks created value. Because, the idea of like eyeballs and someone being the customer and then because it's free and you sell them out. Like that was a very new concept. So to me, I had already believed in this idea that you could create businesses digitally that didn't start with a factory. And so we published our first report on Bitcoin. It was around $1,000 though. But we said that by using the same two-factor model by 2022, it could be $25,000. And that was either saying it was going to be worth 10% of gold or the number of wallets were going to increase. I don't remember the whatever assumptions we used. And then when we published at the time, I did it more as like a thought piece. And of course, I was advocating for Bitcoin. We recommended 2%, but it wasn't something that we thought we would hang our reputation on. But it created immediate backlash for us with our institutional client, who became very angry that we were trying to pitch something that had no tangible value and was clearly just used for buying drugs. So we actually got famously fired by several well-known hedge funds. And but then I assumed we were probably onto something, because I figured if some
Yeah, that's right. When you see that reaction, it's probably right.
yeah, because if someone hates it, they haven't done the work.
Yeah.
And so so now it's almost 9 years later, eight years later. And Bitcoin's obviously done really well.
So what's your framework for understanding the year ahead, next year? Just give me your data dump of, what are you looking at? What's interesting for you? How the macro plays out or the markets play?
I think the story arcs are pretty bullish right now. From the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive, because it's a path for U.S. deficit to normalize. And I think, indeed, I think animal spirits are coming back, even though things like these consumer confidence reports don't show it. And we know that there is tangible drivers of productivity, including AI, in front of us, that justify, investors allocating capital. And of course, there's still plenty of disruption ahead, including crypto. And, I think Bitcoin is still our favorite idea for this year. So we think it'll be the best performing asset class, even better than gold. But I think anchoring all of this is a demographic story. I can send you some charts later, but if we look at the number of people aged 30 to 50 in the U.S., that's actually been steadily rising since 2009. It actually went positive in 2016. And what I mean by that is the number of people aged 30 to 50 matters in an economy, because they're the ones that are driving both credit consumption, but also productivity and innovation. Yeah. I think that this does feel like it's going to be a very bullish equity cycle ahead. And that's why we're constructive. And it's been a rough start for this year, but I think we're just sort of getting through some of the kinks and burning off some of the recent bullishness.
You and I are obviously thinking through the AI in the same way. We're about to produce infinite workers. AI and robots is infinite human intelligence and infinite humans, right? This completely breaks the economic model. We have no understanding what this is going to do. But let's assume we'll get there whenever that happens.
Everywhere you look, AI is taking over, powering businesses, reshaping industries, and disrupting everything we thought we knew. But here's the big question. Are we overbuilding AI? Have we crossed the line into an AI bubble, or are we still in the early stages of something much bigger? Tom Lee breaks it all down, cutting through the hype to reveal where AI really stands today. More importantly, he answers the question on everyone's mind. How do we actually make money from AI? From investment opportunities to groundbreaking innovations, Tom uncovers the key trends that could shape the future of wealth creation in the AI era. Let's dive into his insights and find out where the real opportunities lie.
I want to go back to the psychology of 2000 that many of these people worry about. Is they're worrying about, have we overbuilt? Or are we overbuilding data? Are we overbuilding chips? Are we overbuilding? I'm not sure that we're not still underbuilding. but we might be scarred. And I haven't decided, but where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital, or is this still too early to say?
People who are going to call the top in data center demand have never really experienced industrial cycles, right? Because the cycles actually are going to extend until return on invested capital is well past negative. And I would be very surprised if we're already reaching that saturation now, because we know that any model today would have improved capabilities if you improved computing power or capacity. So we aren't even experiencing the negative side of that utility yet. So I think that it actually would still argue that you need to be investing more capital. And I know, like when you look at percentage of GDP, I mean, look at what happened with China when direct private investment, it got to 40% of GDP. And that lasted years before you had overcapacity in China. So I don't know how we're even at saturation today in AI, but that's just in broad strokes. So I agree with you. I think there's still a big runway ahead. The financial industry used to trade labor intensive, so had a lot of traders and people, and then they replaced all the traders with computers. But someone naively might have said, well, then financial companies' CapEx will go down because they already have computers trading for them. No, CapEx intensity and tech intensity of the banks has actually only gone up since then. So that arms race, without even AI, is consuming more dollars. And that's, of course, I think going to be the case with AI itself.
But how do we make money out of this?
I've got two simple analogies to share that I think we should be looking for in AI. So we just published a study looking at the wireless fiber boom and when the stocks peaked relative to capital spending. And many people, so let's say it was a 20-year CapEx cycle for fiber and wireless. The stocks relative to the broad market peaked 8 years into the cycle. So in other words, like halfway into the cycle, the market will suddenly say enough capital has flowed into the space that they're market performers. However, now in retrospect, the 25-year look back, one industry in wireless pulled away from everything. Two did. The first one is the tower industry. It has produced better returns than handset, chips, carriers, spectrum owners, the towers, and it's a boring business that grows in a unit with demand. The second, of course, was Apple came along, but in 2007, so 13 years into the industry and after the industry's stocks all peaked, Apple came in and essentially gobbled up the economics of the ecosystem. So I think that in AI, it'll pay to look for the tower equivalent and the next iOS that'll come out on top of everything. But I think the second thing that's going to be important is that you just described it. AI is infinite workers with PhD qualifications.
Today. Don't forget, in 2 years' time.
Yeah, it'll be super intelligent, right?
Super intelligence. Something we've never had before.
Correct. And yet, these super intelligent entities have to eat pizza. And what I mean by that is like the best performing stock in the last 25 years is Domino's Pizza because everybody has to eat. So if you could find the pizza of the AI worker, so that's not the infrastructure, it's what you have to feed the worker, that's another moneymaker. And I don't know what that is going to be.
And that's a wrap for today's video. I hope you found it valuable and thought-provoking. What do you think about Tom Lee's ultra-bullish outlook on Bitcoin and the stock market? And his wireless fiber boom study, is AI really the next big wealth generator? Could this be the moment to capitalize on a massive financial shift? Drop your thoughts in the comments below. I'd love to hear your take. Don't forget to like the video, share it with friends and family, and hit that subscribe button if you haven't already. Your support keeps this channel growing and brings you even more game-changing insights. Thanks for watching, and I'll see you in the next one.